Stocks closed mixed on Friday after the August payroll report showed a surprise jump in U.S. unemployment as the economy added more jobs than expected. Do you know BS when you hear it? The benchmark S&P 500 eked out a modest gain for the day but had its best week since mid-June and ended 4 consecutive weeks of losses. Overall, all 3 indices closed out August with monthly losses. As for the jobs report, some think it will put the Fed on hold for September. And if we get more positive inflation news in September and October, the Fed may be done. Inflation has cooled from its peak of 7% last summer to 3.3% last month, and that's based on the Fed's preferred inflation measure of PCE. But don't hold your breath as bond yields and oil prices are up. In my experience, bond traders and oil traders tend to be better than your typical off-the-shelf government pencil pusher. And let's go back to the long-term chart, the 20-year monthly chart on the spiders, the SPY, with the close on Friday at 451.19. And we're going back to the long-term chart because I see the risk increasing. Now, we talked about this, say, a week, 2 weeks ago or so. Here's the previous high, and we had a nice bottoming and basing. Took a while. We moved on up, but we seem to get some consolidation at this level here. Now, if things start to soften out and it leads to a downturn, that could be a relatively nasty downturn. Looks like a nice smiley face, but don't be fooled. Move on here into the volume. Volume looks fine, but there into the MAC, we can see nice bottoming and basing, the upturn with the fast line moving through the slow line here, but it's not accelerating as fast as it has previously. You can see that slowdown in the acceleration here in the histogram, just barely, but this may be the early rollover of this particular move. Before, it was nice and sharp on the way up, but we seem to be losing some steam here, and if so, we have a downward trend, and then that could pose trouble for the future. Pretty much the same thing here in the price rate of change. The slowdown isn't really showing up in this oscillator. It looks like the fast line is powering on up, but I think if we move down to some of the other oscillators, we'll get an idea here. The RSI, we're at a moderate 63.28, but right now we still show a general downtrend. So if we stall out here, the move down could be nasty. Into the stochastics, the slowdown is not really showing up there, and it's not really showing up yet in the Williams, although we do have a sawtooth here. So watch for more sawtoothing, consolidation, and perhaps a move down in the Williams. This is going to be one of the leading oscillators. But for now, I think you really need to pay attention to the actual price chart and see how much consolidation we get on the long-term monthly chart. Check the weekly chart as well. That will show some signs of a slowdown and a rollover. So just be cautious. For now, I would advise staying on the sideline. And for today, that's ChewDog Charts. Thank you.